Looking for financial insights you can trust?
How do you protect yourself as an investor? What's the strategy?
I think it's really simple. I think you just want to be diversified in your portfolio.
The Payne family brings real-world experience to every conversation.
Well, I think that's the problem right now is, right, a lot of people that are close to retirement, they're taking so much risks. And if we do get a big sell-off, it could derail their retirement.
Listen to the Pain Points of Wealth on the Red Apple Podcast Network.
The Roger Stone Show on the Red Apple Podcast Network.
And we're back on the Roger Stone Show. I have one of my favorite guests, one of the smartest guys I know, Barry Habib, is not only a member of the Fannie Mae Board of Directors, Fannie Mae being the government-owned government-backed mortgage company, but he's also the CEO of MBS Highway. He's an entrepreneur himself, but he is more precisely an astute student of mortgages, the housing market, and the Federal Reserve. He has written an amazing best-selling book, his book, Money in the Streets. He's widely credited as the guy who saved the mortgage industry in 2020 from margin calls due to actions by the Fed. It was his presentation to the Fed Board of Governors that created stability at a critical time. So he's actually changed the direction of the country. He joins us today to talk about what is swiftly becoming the number 2 domestic concern. When you used to ask in polls, by what do you measure the economic health of your family, they would say grocery prices, gas prices, and then crime would clock in as a concern, and it was fourth. Now the availability and affordability of housing has kind of soared into the second spot. So grocery prices are down, but they're not down as low as they're going to go. And that's just good. They're not down even to the level of Donald Trump's last year as president. But these policies will drive it there. And, of course, we have billions in new revenues from his tariff policies. Barry Habib has been a strong supporter of the president in all of those actions and joins us now.
What a pleasure to be here with you, Roger.
So, Barry, congratulations on your appointment. Bill Pulte, who is the scion of the Pulte Holmes family, a very dynamic bulldog of a human being, but a man who knows the housing market, a man who knows mortgages, a man who knows the housing industry, and a pit bull for accountability by public officials regarding their mortgages. Letitia James very clearly has prosecuted people for the exact same crime that the documents demonstrate that she committed. He referred those to the Justice Department, which is the proper action for the man of his responsibility. They have fraud investigators at the Federal Housing and Finance Agency. But Bill, I think, wisely selected Barry for this board. So, Barry, tell us about housing and mortgages in America. We got 2 minutes, and then we'll pick it up on the other side.
So the housing market, people are saying that it is certainly less affordable than it had been. Now, part of that is because home values have gone up. But remember, 2/3 of Americans own homes, so they're not complaining about that for sure. It also creates a lot of equity, a lot of wealth. 2/3 of all net worth in the United States comes from home equity. So that's not a bad thing. But if you're trying to buy a home, it makes it a little bit more difficult, clearly. You compound that with higher interest rates, and higher interest rates have a lot of components to them. One of them is the inflation. You mentioned prices at the grocery store. The rate of inflation, that's the rate of change. It has come down. But what people are still feeling at the grocery store is the inflation that we had from 2021, 2022, and the Fed's culpability in keeping rates too low, too long, which that doesn't go away. You still feel that. The rate of change has moderated dramatically below what you're earning, so you're catching up.
Is it not true, however, is it not true? At this point, though, under Donald Trump, mortgage rates are stable, and they're actually hovering near their lowest levels in several years, generally in the mid to low 6% range for the most common 30-year fixed product. So these are the lowest mortgage rates we have seen. You see it being reported. Freddie Mac's primary mortgage market survey showed 30-year fixed-rate mortgages at 6.11%, a slight increase from the prior week, down a little bit. 15-year fixed mortgage rates at 5.50. I mean, these are the Trump policies. They are bringing stability.
How about this, Roger? They're more than 1% lower than what they were just a year ago. So there's your proof.
All right. When we come back, we're going to talk to Barry Habib about where the economy is going to go. He appears today as a private citizen, not in his role as a Fannie Mae board member. So he speaks only of his own opinions, and he wanted me to make that clear, and I'm honored to do so. He's one of the smartest guys I know, and he's every economic downturn or uptick in the country. Welcome back. We rejoin our guest, Barry Habib. He is the smartest guy I know when it comes to the economy generally. He, Larry Kudlow, Steve Moore, a handful of others that I truly respect in this area, the growth side thinkers. Barry Habib was the one who pointed out to me when the president said publicly that he was considering unlocking the value in Fannie Mae and Freddie Mac and somehow taking them public, reaping a huge amount of money for the American people. Because, let's face it, the government should not be in the mortgage business. They're currently both under conservatorship. There's debate about whether they'd remain under conservatorship or be removed. I think Secretary Bessent, Bill Pulte, and anyone else who knows will tell you the president has not yet made those decisions. He is thinking he sees a way to unlock the value, but it was Barry Habib who pointed out to me that you had to keep the guarantees in place. That whatever the president's plan was, it had to keep the guarantees in place. And then several days later, Donald Trump himself tweeted saying he hadn't yet decided what to do about Fannie Mae and Freddie Mac, but if he decided to reform them, he would at all times continue the guarantee of all those mortgages. So, Barry, I learn something every day, and I learn something every time I talk to you.
Well, it's very kind of you, Roger. So, listen, I just want to kind of put this together just for a couple of minutes here. I think it'll all make sense. So let's talk about the housing market in general. I think it's in good shape. That's, of course, different markets have different demand and supply components that go into it. But overall, the housing market is in pretty good shape. Would we like it to be more affordable? Yes, but we don't want to hurt values. That's why the president's been brilliant, along with Director Pulte, in many initiatives that they're putting out there, that they have a deep desire, and they're using a lot of creativity. Now, is every idea going to work? Of course not, but you have to admire their transparency and the braveness to put things out there.
In the New Deal, Barry, Franklin Roosevelt tried several things in the New Deal that the courts knocked down. They weren't particularly good ideas, but so you're right. Not every idea flies when you're the president of the United States.
Yeah, but sometimes it spurs other ideas. So his idea for the purchase of mortgage-backed securities by Fannie and Freddie of $200 billion is absolutely brilliant, and it is already starting to help. Now, what we have to think about is that we want to make housing more affordable. We don't want to hurt the 2/3 of the nation and see values go down. So we are seeing this, but what we need some additional help. Now, Scott Bessent has been very, very helpful and creative. If we get this bank deregulation deal to pass, that would greatly increase the incentive for banks to buy and absorb treasuries. That would help long-term rates probably by about 30 or 40 basis points. Now, we also should see inflation continue to come down, as I've explained to you. However, unfortunately, because the BLS methodology, the Bureau of Labor Statistics, that measures these things, they use the same methodology. Get this, Roger, and you know this since 1985. They have not changed it. All the new methods we have, the government is still using methods from 1985. It's time for them to change this, Roger.
Yeah, the other thing I learned from you, Barry, is that they always come up with their big numbers, the unemployment numbers, the jobs numbers, whatever it is, and they always get the big headline with the huge number, and then they quietly backtrack and say, well, it wasn't really that high, it was actually substantially lower. They've done this again. They restate their finances. It's outrageous.
It is not right. But specific now for a moment to inflation. They're telling us, and the problem with this is the Federal Reserve is keeping rates too high because they're taking this at face value. Many of them, not some of our Fed members who are much wiser than most. And thank goodness for our new incoming Fed chair, Kevin Warsh, who's an excellent choice. I really applaud that.
I think it's a ruse. He's not concerned about inflation. He's concerned about giving Donald Trump a shot in the arm. Look, I learned this from you. You're supposed to, the Fed governors are supposed to take into consideration the inflation numbers and the unemployment numbers. And when Powell cut rates for Joe Biden, they were either lower than or at the same level as Trump's rates. Which means we should have had a much deeper interest rate cut by now. So it's Powell who's acting politically. It's not Trump. Powell has politicized the traditionally, supposedly, non-political Federal Reserve. And Trump, because Trump is a builder, the idea of the renovations of this palatial palace that Powell was building for the Fed, a $3.1 billion remake. Trump went down and looked at the steel and said, couldn't you possibly use all this steel? Because Trump is a builder. Right. And that is the great strength, I think, of Trump understanding housing. He's a builder. He understands mortgages. He understands housing because he and his father built it.
Well, you're right. The Eccles building fiasco, that's a whole nother issue. But I want to get back to inflation because it ties in, is that inflation is overstated right now. And specifically, when you take a look at two things we've talked about, they look at shelter, which makes up 18% of the core personal consumption expenditure number they look at, and it makes up 44% of the consumer price index. It shows that we are seeing that go up at 3.3% a year based on the 1985 methodology. But in today's numbers, it's only going up at 1% a year. Why is that so important? Because inflation really isn't at 2.8%. It's much lower. They also don't understand tariffs. Tariffs, once they're instituted, it's a one-time deal. Inflation's kind of a step ladder that goes up every year, but tariffs are like one step and then it stops. Over the summer, that will dissipate. You will stop seeing the impact from that. You will also hopefully see the shelter numbers come down. What we need to see is lower rates right now from the Fed, which will translate to helping affordability, helping mortgage rates, and helping housing. All this ties together, but as you perfectly said, Jerome Powell politicizing this, not allowing the government to run, terrified of things that are not even correct because he's looking at the wrong methodologies. Jerome Powell was completely culpable by keeping rates too low for too long when the evidence looking forward was there, but he was looking at backwards numbers.
And he's not an economist, he's a lawyer. That's the most amazing. He's not an economist, he's a lawyer.
Not a trained economist, he is an attorney. Why he would be in that position, I'm not sure. However, that's where he is. President Trump inherited him. Yes, he did reappoint him, but he did not initially appoint him.
The Fed is acting very politically. The Fed governor, you have to comment on this, but the Fed governor, Lisa Cook, was rightfully fired from that position by the president, who has the authority under the law to fire a Fed governor for misconduct. This certainly is misconduct. She sues the government, and the D.C. clerk of the courts assigns the case in the Washington, D.C. Civil Court to an African-American sorority sister of hers who was appointed to the bench by Joe Biden. A clear conflict of interest. The local court found for Cook. Trump is now appealing that. Most good lawyers I know tell me that they think that she will ultimately lose on appeal, that Trump indeed has the power to fire her, but she still sits in the seat until then because of the order of the court. So it is outrageous because I think we all understand nothing would help the mortgage rate better than a cut in interest rates, a fair cut in interest rates. We haven't had that.
Yes, we do need interest rates should be approximately 0.75% lower than where they are on the Fed funds rate. That would translate to mortgage rates being about 0.3 to 0.5% lower in mortgage rates. In addition to that, as inflation declines, and if Scott Bessent is successful in passing the Bank Deregulation Act, there's no reason you shouldn't have mortgage rates in the 5.75% range as opposed to the 6.25% range that they are now. And that would spur a lot of buying. It would make housing much more affordable. This is exactly what we need to happen in order to get things going. Remember, there's a lot of people that would like to move up, but they were fortunate enough to have mortgage rates in the 3% range. Now, maybe going from 3 to 6 might be a little bit of a stretch, but 3 to 5 might be something that can happen. You know, it should not be overlooked that also wages have been improving. We're seeing wage increases in the range of 4.5% to 6.5%. This is important to point out, Roger, because with inflation truly, really being right now less than 2%, people's standard of living is improving. Under Joe Biden, it was the opposite. Inflation was at 9%. And wages were not keeping up. We had negative wage growth, which means their standard of living, the misery factor under Joe Biden was increasing, while under Donald Trump it's improving.
So, Barry, there are several emails here. Ask Barry, what's going on with crypto, Bitcoin, and gold right now? What's going on?
Well, Roger, as you know...
Kind of a 2-minute curveball I just tossed you.
You got it. Okay, so as you know, we've been very bullish on gold, and we've been rewarded up 73% year over year. I've also mentioned on your show silver, and that was up. Now, in the very beginning, on January 26th to be exact, I missed it by 2 days. I suggested trimming holdings on both. I personally, full disclosure, trimmed 80% of my silver, 25% of my gold. I missed the peak by 2 days, but I'm feeling really, really good about that. I think ultimately gold will rebound and continue higher into upper levels. It is important because it is being purchased by sovereign nations as a hedge against fiat currency because Bitcoin is too volatile. Now, Bitcoin is going through its normal situation that it tends to go through during these cycles. If you go by the halving cycles, Bitcoin tends to do this. It could be in for some steep declines. Watch levels at around 60,000, 58,000. Those levels of support, in my opinion, have a reasonably good level of holding, and then we could see a move higher. I'm not so sure if we break beneath that, how much lower it could go. We'll have to look at it, but it could dip into the below 50,000 range. But not to panic. Over time, these buying opportunities come back, and they tend to come around. If you're trading it, I wouldn't jump in here just yet. Wait for those lows to be tested. If you're holding it long term, it'll probably come back around. There's a lot of people the last halving in the last cycle when it got down to 19, 17,000 in that range where they panicked and they sold, only to watch it go up to 126,000 a couple of years later. So, this is a very volatile asset. It's not for the faint of heart. And if you hold on to it long term, you'll probably be okay. But gold, I really like. Silver, let's let it test some lower levels and see it stabilize before jumping back into silver.
All right, there you go. Barry Habib, from his mouth to your ears, if you're a smart investor. We'll be right back.
Thanks for listening to The Roger Stone Show. You can hear The Roger Stone Show Sunday afternoons at 3. If you like the podcast, share it with your friends and listen anytime at WABCRadio.com and download the WABC Radio app. Hit that subscribe button on all major podcast platforms. Plus, follow WABC on social on Instagram, TikTok, Facebook, and X. See you next time for a new episode so you never have to wonder,
what the heck is going on here?
Looking for financial insights you can trust?
How do you protect yourself as an investor? What's the strategy?
I think it's really simple. I think you just want to be diversified in your portfolio.
The Payne family brings real-world experience to every conversation.
Well, I think that's the problem right now is, right, a lot of people that are close to retirement, they're taking so much risks. And if we do get a big sell-off, it could derail their retirement.
Listen to the Pain Points of Wealth on the Red Apple Podcast Network.